Okay, so here's our update on the broader markets. It's August 20th. So we have our full weekly candle closing this week. We'll start with the S&P 500. We'll start on the daily chart. And as I tweeted earlier today, the daily cycle decline has definitely started. You can see we actually just touched the 10-week moving average just today. We closed basically right on it. Well, let's see. It's at 42.34, and we closed at 42.28. So we closed right below it, which you'll hear people quote as one of the criteria for a daily cycle decline. Also important to note, we have this gap here. So like between here and here, right? That's a gap. Gaps tend to get filled. So you imagine we probably find ourselves down at the 41.40 area, right? Like we'd really want to hold at least down around here. Like we have a series of higher lows up here, and we really want to try to hold as many of them as possible. Again, this looks like a pretty juicy gap. So definitely you would expect more downside. But what we want to see is we want to see it hold a higher low. I keep saying on Twitter. So example, we come down, fill the gap, and then make a move higher. And then basically we have a daily cycle low that doesn't disrupt the weekly cycle. That's the way to think about it, right? And if we go to the weekly chart, you'll see what I mean by that. So it's week 9, and if we zoom in, like the setup is for a bearish week next week, right? Because now we're set up to open like somewhere right here, and basically make a new low, like basically make a new low on the weekly chart, and this week 9 becomes a swing high. That's what we're setting up for, right? Like you can imagine a candle opening like right here, and then we continue lower, and then what we'd really be watching for is a break below this level, which correlates with some of those levels on that daily chart, right? It's all the same data price action, right? And so that's still a long ways down, which means we have this kind of buffer zone. Once we start to lose the 4100 area, then you're getting to your last chance support around that 4000 breakout level. So this is going to be really important. I always say you should get more excited about the pullback than the rally, because the pullback tells you if you have a sustainable rally, right? Like just like we looked at on the daily chart, like are we going to be able to make a higher low, right, on the weekly and then continue to move higher, right? And it's all going to start with this daily cycle decline. That's how the multi-time frame analysis works, right? The lower time frames need to trigger the higher time frames, and so this daily cycle decline is really important. And as we look at the monthly chart, which is what our focus should be, what I mean by that focus, I should say it's the most important signal. But again, it's going to be influenced by what's happening on that lower time frame, that immediate time frame. We still have our monthly swing low in place, right? Above this line here, right, which is the highs of these candles, right? So that still makes June our possible long-term cycle low at month 27, right? So we had a top on month 22, we declined for quite a bit, and then we potentially bottomed on month 27. Now, a lot can change, right, in the next 10 calendar days, probably 7 trading days maybe. This candle can continue to degrade. Again, think about that. As that daily cycle decline continues, the question is, does it turn this candle red? And this candle would go red once it goes below the opening price, which, again, it's not a coincidence. The opening price is 41.12, right? So go back to that point. If we lose the 4100 area, that also means the monthly chart goes red. This is important. This is how the multi-time frame analysis works. Once you're red on multiple time frames, especially the highest time frame, that's a really important bearish signal. And so we have very, very clear, important levels to watch, which is the good news. Now we have to see sort of which side we sort of sway. Now that's the S&P, and it's basically the same picture for the other indices, although the counts are different. So the daily count is slightly different. So for the Qs, we're on day 44. Friday was versus 43. It was for the S&P, and our top was on day 41. But it's the same kind of idea where the daily cycle high has been put in, and we're now descending into our daily cycle low. In the case of the Qs, we closed well below the 10-period moving average. As opposed to the S&P just kind of like kissed it a little bit. Just closed like slightly below it, I should say. Same weekly count for the Qs, week 9. In the case of the Qs, definitely closer to making a new low on the weekly. Like, it was closer to making a new low on the weekly chart for this week. It didn't, of course. You can see we're still up here. But it puts us close to that kind of 315 area, which is that important level to watch. That's our low from the week of August 8th. And for this one, I'll just kind of note, this really threw a lot of people off, because this weekly cycle bottomed on week 13, which is incredibly early. I mean, there hasn't been a weekly cycle that bottomed that early in a long, long time. And so, but price action does what it's going to do, right? And so now we're already on week 9, right? And the previous cycle was week 13. You tend to expect a longer weekly cycle that to follow a shorter one, so that this one would be like at least longer than 20 weeks, considering this was 23, this was 31, 22, 26. So you can see the normal range is more than 20. So if this was a really short one at 13, and we expect this one to maybe be longer, then this one would be longer than 20. And again, we're at week 9 right now. And so that's going to be really interesting. Well, it's always the question, is this daily cycle decline going to be like, a bearish enough decline that it's going to cause the weekly cycle decline to begin? And that's what we're watching for. And again, in the case of the Qs, it's actually closer to that being the case. If we break below 315, and if I look at the monthly chart, we'll see, I suspect the 315 level is important. Of course it is. So the opening price for the Qs is 313, right? So if you got to 315, or 313.65. So if you got to 313, you would find yourself that was a alert for Bitcoin. You would find yourself in a place where you're basically $1 away from going red on the monthly chart. The monthly chart is already starting to, build an upper wick, which is not promising. That said, we still remain above the highs for July and June, which is, okay, promising for now. But yet we know a daily cycle decline is, underway. And so it's, again, just as with the S&P, it's going to be a question of the strength of that decline. Does it continue? Is there enough bearish follow through that we break this swing low, that June becomes like if we start to break, below, what is this? This is at 315. This is 314.56, the high from June. So the month that's potentially our swing low. So it all kind of triangulates, around that 315 level. And if we look at IWM, same picture, different levels. So this one is definitely a bit more comfortably above that swing low, but also you can see it's a pretty gnarly upper wick. So if we look at the daily, right. So similar to the Qs, closed well below the 10-period moving average. So again, we expect some more downside. Maybe not a ton, since we're already on day 44, but you definitely play for some short-term downside for sure. And if we look at the weekly chart, same kind of deal here. Did make a slight higher high, but then pulled back. And in this case, we really want to be watching that 189 level, which is the low from the week of August 8th. So those are the levels to really be watching. The last thing I'll look at really quickly is the dollar, because that tends to impact things. It tends to move inversely, right? And so for the dollar, it originally looked like this was your daily cycle low, but then we sort of had this back test that failed. In some ways, it almost doesn't matter. I've revised this to make this your daily cycle low here on day 31. So this would put us at day 7. we've now taken out these highs at like this consolidation zone. So of course it's a question of, are we going to be able to take out, this previous daily cycle high, because we kind of started the downtrend here. We've now broken above it. We're going to expect a pullback here because this is a pretty powerful thrust move, right? And so now it's a question of something like this and then, like that, right? And the big thing with the dollar, again, as always, the reminder is the 3-year cycle, right? July was month 18, so that's halfway through that 36-month, the 3-year cycle. And that was a really bearish looking candle, but yet now we have this massive reversal. And notice we had a poke down, so we poked slightly below the low from last month. That is a fake breakdown, right? A bullish fake breakdown. So the expectation is that we would make a new high above this last month's high before the end of the month to complete this pattern. And it looks like we're well on our way there. Again, as you can see on that daily time frame, we're ripe for a pullback, but then it's a question of, holding a higher low and then making that move higher. And if you look at the weekly, right, like we consolidated here, and I mentioned this on Twitter, this has the look of a bear flag, right? That's what it looked like, right? But we held this low here, right? This in the end ended up, sort of really being a demand zone essentially, and then boom, right? Just right through all of this resistance. Now we'll see if we kind of hold this, on this next pullback and then make another thrust up there.